The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 11 o'clock till noon edition, Monday through Friday on market days. No market day tomorrow, so we will be closed. And thank you to John, Steve, 3 great hours. I hope I can keep that up. And we got programming here all day. And this is a very critical day for a number of reasons for me. The rally that we're seeing now in the Dow should be a relief rally. That's what I'm calling it. And I'll explain why in a moment. But let me do 2 things immediately. One is, within the context of markets, I love to look at tides. You're either going to high tide or you're going to low tide. In between, you might get a little meandering, but the tide is on its way. In the short term, you're looking more at waves that go up to the beach. The tide is the core. It is the engine. It is the flow. It is the larger trend. And the reason why I say this is important, because we're about to wrap up the first few days of April, a new month. And the deeper we go down in many of these indices, the harder it becomes to make the March or the February highs a magnet to the upside, especially after 6 years of rallying. It just makes sense that there is some kind of timeout. You know that the Dow made its high March the 3rd at 18,288. I'm doing this by memory. Yep, 18,288. The exact, within 3 days, after 6 years of the exact low, remember we bought the Dow Diamonds in our opening call? That very morning of the low, the 6th, the 9th was the S&P low on Monday. We bought it on Friday. I hardly ever buy on a Friday an index that's making what might appear to be all-time lows, because usually I would wait for the Monday. Monday's the usual day. A sharp decline, and then it turns around to the upside. But all the technical indicators, especially based on the DOG, which is the 100% inverse of the Dow, was saying that that was an opportunity to make a peak D. So the 120-minute chart was signaling, and the DOG, the inverted diamonds, was saying, hey, there's a chance that this could be a low, besides which, you remember, I had a left side, right side price, time match, a bunch of other things. So now within this context, what we're looking at is a year later, 6 years later, you can expect, after no more than 122% decline, and all the rest are basically single digits, maybe touch of 10% intraday, you can expect that this is a period where not only do we rotate, but certain sectors are becoming extremely vulnerable. And we'll go through some of those today. So let me just quickly go through the numbers here. The Dow's up 64 at 17,762. The S&P's up 7 at 2,067. The comp index is up 4887 at 780, up 738 at 4,887. The VIX index is down 34 cents at 14.77. This is really a very important period, because the volatility index pulling back like this might be saying, hey, I'm giving you some basic strength, but that's not good enough. You should see the counterpoint. The Dow should be up way deeper, and it should be up at about where it was earlier, where it hit, I think, about 100 up. It should be there and holding there. And this, to me, looks like when a tide has changed on the shorter term, every opportunity to rally is an opportunity to short. That's basically what happens. In a bull phase, every opportunity to pull back, every dip is an opportunity to rally. So let's go on with the numbers. Gold right now So the E-minis that we're looking at here are up 650 at 2059. See these arch formations in the daily? Look at these arch formations. There's a second, like a butterfly arch. I shouldn't have said that. That relates to the butterfly that, I'm just wondering what I should do, because Larry uses that, but he uses it in a slightly different term. What I'm looking at here is it's really like a heart formation. You've got the left side arch, now you've got the right side arch. That's basically what I want to say, like an M, lowercase m. So I'm watching that very closely, and look, there's a little mini one right here in the 120-minute chart. But let's just go on. You've got gold having a pretty nice move yesterday, very sharp, but then I do not like when you see these sharp moves up and then everything gives back. And then look at this, it's a leg B to the upside and then a peak B. That's, whoa, just about to sneeze here. Be careful, be careful. No, I saved the day. What's really important about this is that in this second arch formation, gold is given back not 4 points, which is okay. It's giving back 13 points, 12, 13 points. I don't like that at all. It says it wants to go back to 1187. Most importantly is you've got the dollar pulling back and gold is pulling back. This is the opportunity for gold to move. Some gold stocks are holding okay. Now, let me just do this. There are a couple of things going on, and what I'm going to do is I'm going to just run this quickly. Dollar is making an H pattern, but it hasn't confirmed the H pattern. If it goes, the index goes under 97.20, it's probably going to retest the low of 96.17. That means that that's where the gold should move higher. And if it doesn't, it says deflationary aspect right now, or let's put it this way, lack of inflation is apparent in many of the commodities and bear markets. Why should gold be any different? That's my point right now. It's been my point for quite some time. Let's see what happens. Yeah, that doesn't mean to say that you can't trade these things. I'm just saying in the bigger picture, that's what I'm looking at. And two things I want to look at before we do anything else is I want to look at TLT. The TLT made a very strong leg B to 132.76 in the daily, pulls back. Now, if by Tuesday the TLT hasn't taken out yesterday's high of 138.48, that's going to be really important. Why? Because what it's saying is that the pattern that I was talking about earlier, where we've seen so many H patterns, lowercase h patterns, we could just be merely in a trading band with bond yields stuck in a range and the bonds themselves stuck in a range. We'll be able to talk more about that early next week. We'll have a much better feel for things by about Tuesday. I think this is exactly the time we've got to go to Sandy in Denver. Sandy, how are you?
Hi, how are you this morning?
I'm well, thank you.
I was wondering if you would be kind enough to tell me if Kroger would be a good stock to buy or buy and hold.
You know, I looked at Kroger recent. I had done a lot of notation on Kroger, but because of certain aspects of my particular platform, it's there somewhere. But my computer either crashed or whatever it doesn't do that often. I lost the data. When I redid it again, I couldn't believe my eyes, because Kroger, which is in the, I guess it's retail foods, it's in the, Kroger is a supermarket, so it's in the retail area, I guess. And I thought, am I looking at a high-tech stock? Is this what Amazon should really be looking like? Well, there's a rule on Wall Street, a rule that is often overlooked, and what it says is stocks that go to all-time highs tend to continue going to all-time highs for quite some time, and stocks that are at all-time lows could continue doing that. So it's not a matter of buying lows because you think, oh great, now it's going to turn around. You can even see JCPenney, which is doing almost everything right, has had a real struggle to get off the bottom. So the question is this a time my thinking from the way of the tone of your voice is this something that I can buy for at least a 3-month, an intermediate term type rally, going to higher highs with fairly limited downside? Am I framing that correctly?
Yes.
Okay, so now here's my point. In the stochastic of the monthly chart, it's at 96%, and it's in leg D. It hasn't had one dip in the monthly chart since peak C in July of 2014. And if you know anything about the Chapman wave, always look for Ds, and it's in leg D right now. The stochastic is extremely strong. The MACD is very strong. I go to the weekly chart, it's in leg E. Unless it's recycled, it'll be an unusual pattern for the recycle, but it could have. I'm calling it E for now. The stochastic's at 94%, and the MACD is just starting to flatten out. And the data you've seen, the price hold up. But in fact, what's happened is the technicals are starting to deteriorate. So, Sandy, if I'm going to give you two scenarios. I don't want you to jump in on any one of them. I want you to think it through over the weekend and then formulate some kind of a methodology, a way of treating the highs with respect, saying, you know what, when you flatten out at all-time highs, there's a chance that the inners are starting to weaken a little bit, and that it might be best for me not to either jump in right now, but to only, this is a part A, is to buy, let's just say you were going to buy 100 shares. I would buy 10. I'd buy them right now at 77.10. This is if you've done your homework and you really like it. You're just waiting to hear what would be the best entry point. So here's my thinking. I would just really nibble here just to have a foot in the door. I actually don't think it's going to go all that much higher. It's at 77.10. KR is the symbol, 77.10 up 33 cents. I think it can go a little bit above the 77.74 level, maybe to the more 70. I'd give it a best chance right in this particular time frame. Now, it is a defensive stock in the sense that the cyclicals are looking quite poorly right now. This is the stock that fund managers tend to want to go to, but the history, when you're looking at the chart pattern, says, I have no idea if it's a cyclical stock or a defensive stock, because all it's done since 2014, mid-2014, is skyrocket to the upside. So here's my thinking. Part A, number one, you could just nibble here, but really wait, have patience to wait for 74 to 77 right now, between 74.50 and 73.30, before it gets to the big gap up on the 5th of March with the low of 72.60, somewhere in that area, 74.73, do one of two things. Either give me a call and let's look at it again, or I would suggest if you want, you can get a small position, another small position then. And that leaves you in a strange situation, because you've got your, say, 10 shares or whatever it is, and let's just say now it goes to 78.50. I'm completely wrong, and it goes to 79. The big question you're going to say is, oh man, what do I do now? Because I haven't got a full position. It's done beautifully. It's gone up another 5%, and I've only got this tiny little thing. So can you hold on, and I'll give you the conclusion to the second part of this.
Okay, yes, thank you.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So this is what we're looking at. We've got Sandy online, and we're looking at Kroger. KR is the symbol. It's up 38 cents now at 77.15. And the question is, having moved up so consistently, the pattern that I'm looking at very often creates something like this. I'm going to draw it in. It creates a long uptrend, and then that uptrend doesn't just come straight down. There is so much upside momentum that what happens sometimes is you get an arch formation, and that arch formation wouldn't be up. The arch formation pulls back not all that much. It pulls back underneath either the 9-period moving average, in this case, the black line of 74.04, maybe a little bit longer, and then it needs to quickly go back and retest to see if it can make, because today it's making a peak E in the weekly chart, could be an alternate count. So, okay, so Sandy, so the first part is just to maybe just a kind of a feeler, because you don't have it, and you like the stock, you'd like to be in it, but just a feeler, and if it actually gets away and moves up, it's okay. You're in the stock. You're not going to make a fortune, but at least you're in the stock and you're making money. That's part one. And then I would add to it, when it comes back and retests in the 74 to high 73 area, holds there for about 3-4 days, and then it starts to move higher, I would say, okay, I'm going to add a little bit more. Now, if you're asking me, is it my opinion whether I would be buying it now, I would say that the risk is that there could be maybe 2.5 points to the upside. But if it starts to break under 73 within the next 7 to 9 trading days, then there's a chance that you get a deeper correction and that you get a much better price when it touches the body at the opening. That was the opening. 71.32 was the opening on the week of the 6th of March. And I would say I would prefer to see a pullback towards the 72 level. It doesn't have to get there, but towards the 72 level, and then to assess how the stochastic is holding, how the MACD is holding in the weekly and the monthly charts, and if the daily chart stochastic has gone from 71 to about 38 or 33% or even lower, is it ready? So that my thinking is, for risk reward, I would prefer to see a pullback. Give yourself a 2-point stop on the pullback, and then you've got yourself a 2 to 5 ratio, 2 points down, maybe 5 points up or more. Here you're looking at maybe 2 points up with the potential of 3 to 4 points down. That's kind of my thinking. Does that help you?
Yes, that does. And thank you. And thank you for telling me about the timing also.
Yeah, and the only other thing that I would say is it's looking great. And stocks that have survived this week and next week are the stocks that I think that are going to hold up well. And that might be part of this. That's what I'm waiting to see. So I like it. I don't want to dissuade you. And that's why I said maybe you could just nibble here. At least you're in it. And you personally will get a feel for how it's acting or reacting with the market. I hope that helps you a little bit.
Oh, it helps quite a bit. Thank you so very much for your time.
And I'd love to hear from you again. Thank you so much for calling.
Thank you, Basil.
Have a great weekend, Easter weekend. That's Sandy in Denver, and now we're going to go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
I sent you an email right before your show started. I don't know if you saw it, but
I don't know if you heard the show before, because Steve Rhodes was talking about it, and I sent to the den a message saying 669 round number high, and lo and behold, I looked to my left, and there on the screen it says in my emails, what does it say? It says round number. Check out AZO 696 round number all-time high. Wish I was paying attention when it hit that, already off almost $10 in an hour or so. So okay, did you do anything? Have you done anything yet?
No, because when I looked at it, then I emailed you. It was already off, probably a good $8 from the high, and so I was wondering what your thoughts are on just getting short this, or if you think it's got a little more bounce in it.
You know, this is part of what I've been looking at over the past 3 to 4 weeks. There's a very big divergence in many of the sectors that have been the absolute best, with the stocks that have been the leaders, and some of them that are falling off. For instance, AZO is making an all-time high at a round number high. AutoZone, car, truck parts, just an unbelievable mover to the upside. But AAP, which is Advanced Auto Parts, also in the same business, went to a peak 36.46. Yeah, peak D in the monthly, peak E in the weekly chart, and in the daily chart went to a rogue wave peak F at 165 round number high, and now it's at 143. So let's investigate. Let's look at this deeper. Let's be back in a moment. We're on with Mark in Denver. We'll be back with AZO and AAP.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're looking at AZO. AZO is AutoZone. And the real question is, what do we do now? It's trading at the low of the day. It's at 685.82, down 7. That means it's off. 696 was I off 11 points from the high. Now, Mark, there's something I learned. It took me, I can't even tell you whether it took me 10 years or 15 years to learn. I like to time things, and I love when I'm able to time an exact low or an exact high. We've done it in my opening call. We've done it with a couple of things just recently, in fact, a couple working out. We'll see how that works. But most importantly is I used to get so upset when I missed the exact turn that I never went back in. In other words, I missed the opportunity. Everything was there. I just didn't pull the trigger at the right time. And then I thought, oh, I missed the turn. But missing the turn is not the issue. It's getting the trade. It took me a long time to figure that out, that if you've identified the turn, then you've identified the tide. And if you throw a piece of driftwood into the water and the tide's going out, then no matter what happens, that driftwood is not coming back onto shore until the tide changes. And if the tide is coming in, you could throw it out. No matter what happens, unless it can get past the waves where the waves originally culminate from, it's just going to keep coming back to shore. So I would say to you, whatever you were going to do, do it, but change the proportion of what you would do. In other words, you feel that you 4 points off or 6 points off what you would have done, make your position smaller of whatever it is. Let's just say you were going to buy 5 puts, 80 puts. I'm just saying. I would then say, all right, buy 3. What difference does it make if you... Oh, I'm sorry, I sound like a politician there. What difference does it make? It makes a big difference because it makes a difference in your psychology. But if you do take the trade, then all you're going to do is adjust your risk to reward, and you've still got the trade. And am I making myself clear?
Yeah, I guess my bigger question is where do you think's the downside target here? I'm seeing a pretty good spike on March 3rd, where it hit a pretty good high at 670, 476.
Let's make this as easy as possible. We're in leg E. We haven't even made a peak E, right? That's number one. So we haven't got the tidal turn. We do in the actually even the 120-minute chart. I think I have to go back. I've got it as a B, and B's at all-time highs. Even a 120-minute chart is unusual, so I need to just do this. Let me do this quickly. A, B, C, D, E recycles and goes A, B, C. Okay, that's right. D, E. That it's a recycle and goes to an E. That's fine. So basically, what I would do is I would say, if, and you have to say if, because this is an all-time high, one of the strongest stocks in the whole market. So, number one, whatever you do, if it goes 1 penny above 696, even if the very next day it turns around, I'd use that as 696.01 as some kind of a mental stop or a physical stop if you're going to use the stock or if you're using options.
Okay.
But most importantly, what I'd be doing is I'd say 678.80 is the 9-period exponential moving average. The low of yesterday was 693. So 693 was the low. No, it's 678. I was just going to say that's impossible. 678.60. So that says by 20 cents yesterday was lower than where the 9-period exponential moving average is right now. So until it takes out 675, closes under 675, we really don't even have, I don't even have a signal. I don't even have, even if it does take that, I won't have a signal because the stochastic at 87%, you'd have to see this thing drop 17 to 22 points for the stochastic to go under 80%. Oh, even more than that. And for the MACD to turn around, it would have to be a really sudden move to the downside. So this is like an initiation step. So I would not even get carried away by looking at where do I think it could go. I would say there are a lot of downside targets if we've identified the turn. That's the most important thing. And if you've identified the turn, then you can go step by saying, take out 678, close under that. That's the first step. Take out this up channel trend line, the inside track. Let me just draw the next level here. You take out this level right there. You close underneath the support level of 670 to 666 in April. That's going to be a big negative. But what I was going to say before the break is that my suspicion from some of the auto parts companies is that this is also telling me that there's going to be there's some kind of a pullback going on economically, because the new cars have done very, very well. I suspect that's going to impact negatively the auto parts companies over the next 6 months. So I'm looking at this as the potential start of a turnaround. AZO is the last one that I was waiting for to make that kind of characteristic that we're looking for. And I would say to you, the downside is step by step. Those are the levels: 676, what did I say that was? It depends when. 666. Those are the levels that I'd be looking at. And if that works out, then the weekly has to go all of next week without taking out 696 to even make a peak D. So I'd only go step by step. I don't want to go out on a limb here because I'd be doing it emotionally and visually, but I would not be doing it technically. Okay. If I see that there's weakness coming very quickly into the technicals, then I'm going to say to you, next Wednesday, I'll say to you, hey, Now, Mark, I'm looking at this as a potential, and I'd go to the next level, and I'd say my target now, let's just say it has 2 lousy days, Monday and Tuesday, then I'll say my target is between 678 and 666, 675-ish, and then 666. So I'd go step by step, but I can't do that until I even have the, I don't have the temerity to say, we've made a turn. We made a turn in the 120-minute chart. We've made a turn on the day, but we haven't even made a peak. You understand why I'm trying to instill in you the sense of a dialogue that says, I don't want to just turn around and say, oh, my God, if this fails, we can go down to 600. I need proof that it's even made a turn. And the proof is that the action today and maybe the action Monday will give me that the evidence that says it's at least the rudder is turned. Now the boat has to turn, but it's a super tanker. And to really get going, you want to give back. You want to get into the candle. Here's what I'm going to say to you. You want to get into the candle of the 27th, you start messing around with that candle, and I'll immediately say to you, okay, my next target is going to be 652. That's what I would say to you.
Gotcha. All right. Well, we'll keep an eye on the Trader's Corner and see how we do.
Thank you very much. Now, I might not put this in because at 685, I might show it as a good example of another sector that might be turning. Okay. So, but I'll be keeping my eye on it. Believe me. Thank you so much for calling. I appreciate that.
Right. Take care. Bye.
Thank you. That's Mark in Denver. Let's go all the way right across town, and we're going to go to John in Philly. John, how are you?
Basil, you're having a very busy day. Good conversations. Thank you for doing all that. Basil, wanted to ask you about the NASDAQ Composite COMP.
Yes.
Very specifically, this rallied into an all-time high.
Yep.
On Friday the 20th.
Yep.
We sold off into
5,042.
Right. Sold off into a low on Thursday the 26th. And I've been tracking your work, and I've got my own, and I've got some suspicions, but want to ask you, is that high on the 20th, is that a tradable top?
I believe so. I'm going to make it as simple as possible. When you say tradable top, the implication is, do we not get back there for quite some time because we're going lower? And my answer to that is, everything I'm looking at suggests yes.
Easy answer. I love it.
Now, one thing I do want to say to you is that today was a good example of wheel spinning. A lot of noise was made visually by seeing the market suddenly shoot up, doing nothing, being down 7 points in the S&P earlier on, and then all of a sudden turning around and doing it with speed. But it's a very light volume day, number one. This is where I do think volume is important. Number two is the captains are out of town, and maybe the fourth mate is out there, or maybe the cook. I don't know. But whatever it is, someone is told, hey, follow the S&P. I don't want you to make any mistakes. I'm out for the day. It's up to you. And now the cook says, hey, it's moving up. I'm going to go in. Oh, it's moving down. I'm getting out. So this is not what you would want as leadership. Most importantly, I'm looking at the XLV, and there are many stocks in the XLV that are in the NASDAQ. And the XLV made exactly that same kind of a rally, a right arm extension to a new all-time high, and not an all-time high, but a recovery high back on the 20th. And now it's plunged. It's come back down in that pattern that I call the Eiffel Tower, straight up, straight down, like an uppercase A. And that's the Select Healthcare XLV. And the other thing is the IBB is absolutely not participating. It was not only the leader, it was the savior. The XLV and the IBB was the savior of, I couldn't even mention how many funds out there when they grabbed this, and it saved the day for them, because every time they bought it on a dip, even if it was a 2-hour dip, they were rewarded. I don't think that's the case now. So I'm suspecting.
Can I ask you?
Yes.
Basil, you mentioned something just here. Can you just share with us, please, that pattern that you call right arm extensions?
Yes.
Is that typically associated with rallies rallies that complete larger rally patterns?
Yes. Let me answer you very specifically. Yes, in the time frame that you're looking at. I don't want to make it confusing. In other words, if it's a daily and it makes a right arm extension, then what you have to do is you have to look at it and say, all right, we've made that extension, but it might be the daily, and the daily could give you a pretty sharp pullback from that. When you look at the weekly, there might be a different wave count. In other words, I don't want to say to you, yes, when in fact, you see, with your implication right there, you were talking about one time frame, but I think in the back of your mind, you were really in the process of talking monthly, correct?
Basil, you know me far too well.
So I just wanted to be real clear, because if someone's listening, I didn't want that to be a, let me show you. This is chapter 18 of my CD, right arm extension. So what happens in the right arm extension, there's a whole bunch of stuff that goes on. Here, this is quite a good example of what happens. Let's just say you go, it looks like a peak D, and you've pulled back. This is slide 342. I'm looking at HON, Honeywell, back in the mid-2000s. And it went to 37.5, and it pulls back, makes a cup formation, and then it goes back up. But when it went back up, the stochastic never went to where it was when it made the peak D. And now it's gone peak A, gray B, because it's under the previous high. And then it goes to a C, and then that fails, and that looks like a C minus. I always say, no, C minuses are really rare in a weekly chart to fail at an all-time high or recovery high. So what happens is you have to reassess, and then you come back and you look at it and you say, oh, what that was an alternate count. And that right arm extension went to leg E and then peak E. And what happens is that you got a failure. So it's a little slower than what I call the rogue wave. A rogue wave usually occurs, you're short and you're correct. Everything looks great. And then out of the blue, you see the stochastic move higher, the MACD barely budges, and then the price shoots way above the previous high, takes out all the shorts, all the folks who got out thinking, oh, great, what beautiful timing. I got out in time, say, oh, I was wrong. It's going, I'm going to get back in. And that bar stays high enough for just long enough to get the shorts to cover incorrectly instead of adding to their positions, to get the longs to rebuy incorrectly. And within 1 or 2 bars, it's back where it was at the very bottom of the range. So in a sense, you can see that the stochastic, well, let's go back to what we were looking at. The composite index went right there. It rallied, but look how poorly. Let me open this up so you can see. Look how poorly. It was like a cup pattern, and I had the same thing there. You remember when I was talking about that phantom peak? Oh, we'll be back, folks. We've got a break coming up here. Do you remember when I spoke about the phantom peak? And I said I could call this a DOC. Now we've got the D. It's funny how that works. I'll be right back with John and Brent as soon as we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Folks, we're back. Just let me finish that John signed off because he knew exactly what we were talking about. So this is like the coda. This is as if the buy mode wasn't finished. It went to a peak C at 5,087 on the 2nd of March, pulls back, makes a cup formation, breaks above it, goes to an E/D. That would be a D because that's a phantom peak. Oops, I don't want to make it too complicated. Goes to the D, and all of a sudden what you've got is a top. And look at this. The real issue is look at the way the technicals are right there, and right there. Look how terrible the technicals were on the 20th of March, and they failed. But the price hasn't broken down. So until the comp index really takes out the low of 48.25, it's just in a sideways consolidation. I think it will be taking it out. Let's go to Brent in Martinez, California. Brent, how are you? Oops, Brent, you there?
I am. How are you today, Basil?
I'm well, thank you.
Very good. I was really just calling today I wanted to thank you personally for everything you do. Every day you come in here and share obviously the vast knowledge that you've acquired over all these years. And I mean, I just thank Tom, too, for bringing you and Larry and just everybody. I mean, if you put all the years together of experience you guys have, it's phenomenal. We're very fortunate to have you guys out there and helping us, and I think it makes us better traders. And we all have to go through, ourselves. I mean, anybody who's doing this, you have to put in the time yourself. And go through the trials and tribulations of trading, and it's just, you have to do that. But it sure helps to have people like you out there. So I do appreciate it. I want you to have a great holiday, and thanks again for everything you do.
You know, I appreciate very much what you just said, but you know what? We appreciate so much the listeners, especially those of you who call in with prescient questions and trades. And you are one person that people really listen to. You call in with cogent questions, and you've already got your trade in place, and you're really looking for some confirmation. I'm not the one that made the trade. You're the one, and I have to congratulate you. And that covers a lot of our listeners. People email me and say, "Wow, thank you for having discussed that with so and so, because we really got a lot out of it." So your trade that you had the other day, Petróleo Brasileiro, SA and ADS, trading at 670 right now, up 35 cents. And leg C, you bought in the 5 area, made a low of 490. Beautiful, beautiful position play, and a nice way of looking at it with patience, waiting for that to come in.
Well, thank you very much, Basil. You know, one question I never asked you that's not trading related. Did you ever surf in South Africa?
Oh yeah, I used to surf. I wasn't one of those surfers. I used to like body surfing, and I love the ocean. I love the waves. Grew up with it as a little pipsqueak going down to the water. But I have to tell you something. I hate the water. I hate getting cold. I like warm water. I like it in Durban on the East Coast. There's warm water. It's fantastic, except there's a little problem: sharks. So what that was the first beach in the entire world to put electronic fencing below in the water to get rid of the sharks, and it really worked. I think over all the years, decades, they've had maybe 3-4 shark attacks at most. But I wasn't one of those surfers that you're looking at in Hawaii and all that. I just used to go down, and the water in the Atlantic Ocean is so cold that to get me in, I could be on the beach for a day and go into the water for 5 minutes. So when I went in, it had to be perfect waves, and then I loved it. So yeah, I wasn't away. Hey, have a great Easter.
Thanks for sharing.
Thank you so much for calling. Folks, stay tuned to TFNN all day and have a wonderful Easter, and we'll see you, and wonderful Passover, holiday time, and we will see you back here Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.